Now, there are two factors that have drove the action in the first quarter. Interest rates, which I already mentioned, and energy prices. Oil finished the quarter at 100, but while it's still up nearly 40% for the year, it also is down substantially from its highs last month. Right now, the price of crude is caught in a tug of war between geopolitics. Nobody but China and India want Russian oil if they can avoid it, which creates a shortage, and worries about a Fed-mandated recession that will crush demand. So now let's talk winners and losers so we get a little more granular. Given these incredible runs in oil and gas, the energy sector was by far the best performer, up more than 37% in the first quarter. I mean, you knew that was going to happen. I hate markets that are led by energy because it's like an army led by General Custer. The followers rarely make it out alive. Other than energy, only the utilities managed to rally in the first quarter, which is really amazing because they're classic recession-resistant stocks. AEP, one of our favorites, just was phenomenal in the first quarter. Everything else was down, some a little like the financials, the staples, the industrials, and the healthcares, some a lot like tech, consumer discretionary, and communication services. The latter group crushed by big disappointments from the mega-cap stocks, yes, like Facebook and Netflix. How about individual winners and losers? The 5 best performers in the Dow Jones average were Chevron, okay, Travelers, much better than expected quarter, American Express, opening around the world, Dow happened to be able to put through a bunch of price increases, and Caterpillar. It's an oil and insurance company, a credit card company, and then a pair of classic smokestack stocks. Worst performer in the Dow, this was rather shocking, was Home Depot. This is without them ever saying anything bad. They told it straight. They didn't give you much of a forecast. Followed by Nike, and that was worries about China, Salesforce, 3M, Walgreens. Home Depot and Nike are in there because of worries about housing and the consumer in general. Doesn't seem to matter that Nike had an excellent quarter last week, and I think you can go higher. Salesforce, owned by my charitable trust, is a great company that unfortunately belongs to a hated group. 3M is being gutted by litigation that I just don't think they can get a handle on. Walgreens is another one that reported a good quarter last week, but can't get any love because it didn't raise its guidance, and so it's written off as a COVID winner. What a curse. How about the top 5 in the S&P 500? Now, this is very interesting because, of course, you've got Oxy, all right, oil, Mosaic, fertilizer. A lot of this is Russian shortage, okay? Then APA, then Halliburton, which is a stock owned by the Charitable Trust, which I like. That's because we believe that oil companies are going to be drilling more than they currently are. Remember, a lot of them have shut down. APA is one that I really am interested in. This is one that's largely natural gas at a time when natural gas is needed around the globe. Watch that stock. It could be good. It's going to be able to get the pipe to be able to get it to market, too. Doing a lot of work on that one. And the Marathon oil, which speaks for itself. Of the top 20, 16 are energy plays, 3 are ag plays, and the last one's a takeover story. I mean, well, hey, what else was there? If you weren't in oil and gas, you did poorly. Now, how about the S&P's 5 biggest losers? The first is this wild trader, EPAM, which is a software and tech consulting company that has a lot of employees in Ukraine, Belarus, and Russia. Tough situation. Then we've got Etsy, talked about that at the top, PayPal, very out of favor, right, and Netflix. And I've got to tell you, I saw after the close that PayPal got recommended by Wells Fargo. Maybe that helps it. I don't know. IPG Photonics, this is a very interesting one. This is a laser company with significant operations in Russia.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.